So we'll go first to case number 1. Basically, it's a discussion that what is this nature of supply? It is an interstate supply or an intrastate supply, specifically in case of an intermediary who is in India. And in this given set of facts, the intermediary who is in India is basically facilitating the supply of goods between the supplier and the recipient, who are both outside India. So the seller of goods is outside India in USA, the buyer of the goods is outside India, that is in Belgium. And the intermediary who is in India, he is basically doing that facilitation activity and he'll be earning commission out of it. Now the question, the very simple question which basically that needs deliberation is that whether this transaction is taxable, and if it is taxable, what is the nature of supply, whether it is an interstate supply or an intrastate supply. 4 possible views are there, that is it is intrastate, interstate, or one view is that because there is no clarity whether it should be inter or intra on the basis of the way provisions are written. That's why probably the levy would fail. Interestingly, in given set of facts, there is one exemption notification also, which is 20/2019. And that exemption notification has been given under IGST provisions, under IGST, but not under central tax or state tax, where it specifically says that wherever services are given by an intermediary, where the location of both supplier and receiver goods is outside India, and where certain conditions are satisfied, then that service is specifically exempted. Now, the problem which is there, which all of us know is this, that before we decide what should be the place of supply and whether the transaction is taxable or not, we have Section 7 and Section 8 under IGST. And Section 7 basically talks about what is going to be the interstate supply. It talks about what is going to be the intrastate supply. And 8.2 specifically says that subject to provisions of Section 12, the supply of service where the location of the supplier and the place of supply of service are in the same state or same union territory, it shall be treated as intrastate supply. The important point for emphasis for all the participants is that 8.2 starts with this phrase by saying subject to provisions of subsection 12. And Section 7, subsection 5C says that whatever is not and does not qualify as an intrastate supply, but the service is supplied in the taxable territory, then it becomes an intrastate supply, supply in course of interstate trade and commerce. Now, the issue is because the provision of Section 12, as we all of us know, are not applicable in the given case for a very simple reason that 12 starts with where the location of the recipient of supply and the supplier of the service, both of them have to be in India. Now, in given case, because the recipient is not in India and it is outside India, that is why provision of Section 13 are applicable. And when the provisions of Section 13 are applicable for determining the place of supply, we have 13.8b, which basically says that in case of an intermediary services, the place of supply shall be the location of supplier of service. And that kind of basically brings out that in this case, location of supplier and place of supply are both in India. And thus the transaction, it looks like that it is taxable, but whether it will be inter or intra, it shall be dependent upon that whether we will follow provision of Section 8 or we will follow provision of Section 7. Again, only very briefly for the benefit of all the participants, we have 2 High Court judgments on the very similar issue, which have, one is from the Gujarat High Court and one is from the Bombay High Court, where in case of Gujarat High Court, when this issue was brought up and on the similar set of facts only, and the issue was asked, the Honorable High Court said that clearly because you have 13.8b, as we just discussed, which determines the place of supply in case of an intermediary, and because the location of supply and place of supply both are in India, and because the place of supply shall be the location of the supplier, which is that particular state, hence it becomes an intrastate supply, and it will be leviable to CGST, SGST. Interestingly, the Honorable High Court also said that the exemption notification which is given under IGST would not be applicable on given case, and because it is an intrastate supply, and that's precisely the reason that exemption has been given under IGST, because it is an intrastate supply, not an interstate supply. And then we had this a split view from the DB from the Bombay High Court, where the Honorable one judge held that the levy would fail because 13.8b is ultra-virus to the scheme of the law, whereas the other honorable judge had an understanding, or the judgment which said that that the reference to 8.2 read with 13.8b shall be misplaced in this case, and it should not be treated as an intrastate supply. I have just tried to sum up all the possible provisions and the literature in this regard which we have. So the question for before all the participants who are here is that what is the nature of supply in given case? How should we read section 8? And how should we read section 7, and whether if there will be a tax liability, what tax should be paid, or is the exemption available in given case? Now participants may raise hands and we may unmute them so that we may take their views. And at the end of it, I will summarize the views, and probably I'll give my views, and then we'll go to the Abhay for his final views on the topic. Yes, anybody? So we have hand raised from Mr. Nilesh Sabu. Okay.
Hello, can you hear me?
Yes, sir.
So my view is still we have to read the subject to the provision of section 12. They have categorically mentioned the section 12. So in the minds of the drafting is you have to give importance to the subject to. The subject to has also referred to the yield to the meaning of the other section. So section 13 will not covered under the section 12 of this thing. That is my first argument. Secondly, the overall idea of the lawmaker. If, for example, I am doing a marketing services a customer who is located in the state of Kerala and I am located in the state of Maharashtra, the services per se are consumed in the state of Kerala. So Kerala should earn the revenue, not the Maharashtra. But factually, this will not be possible to determine the place of supply. So in that scenario, it should go under the IGST and it should be allocated in other way around. It should not, the Maharashtra should not earn the revenue out of the IGST supply. That's why they categorically issued the exemption under the IGST notification saying that this is the case of the thing. Third thing, the nature of the section, if we read the chapter, it says the determination of nature of supply. And the section, chapter 5 will read as a place of supply for goods or services or both. When we say determination of nature of supply, when it should cover under the clause 3, which is say when it cannot be determined in any other category in the taxable territory, it should be treated as the IGST supply. So these are my 3 arguments with respect to this. Having said all these things, there has been one FAQ, though FAQ does not have any, but where they have said it should be treated as a CGST with respect to, I guess, in related to banking and financial services. Right. Intermediary services, but it will be treated as a CGST HST.
Okay. Point noted. So basically, you are saying when you read 8.2, you have to give reference to what is specifically mentioned subject to provision or subsection, section 12. Okay. Any other participant has any other view, contradictory view, or anything to supplement?
Yes, if I may contribute.
Yes, sir.
Yes, I agree with the things said by Nilesh Bhai. I just have one more argument put for why it could be treated as an interstate supply. We also need to make possibly draw some reference to Article 246A, Clause 2, where they have tried to put forth that the Parliament of India will have the exclusive powers to make laws with respect to interstate trade and commerce. Not interstate supply, but interstate trade and commerce. Now, whether transactions in course of your import or export, not import or export in parlance of GST, but I'm talking about general parlance. So whenever you're transacting with a foreign entity, whether you're purchasing or you're selling or whatever you're doing, so all those transactions, whether if those would be treated as an interstate trade or commerce, in that case, the exclusive powers to formulate laws and levy taxes will only be with the Parliament, and by default it will come under IGST. So with that being said, I am of the view that your provision section 8 determine nature of supply. It's possibly a case of bad drafting, and kind of it's should have been read that transactions which are having the place of supply is determined under section 12. For those cases where your place of supply and the supplier in the same state, so all these things come into play. So a way of reading your section 8, how I would read, is that intrastate supply subject to provision section 12. I am reading the headline and the provision together. So intrastate supply which are subject to provision section 12. So for so and so shall be treated as intrastate supply, kind of in that fashion. I'm trying to just put a harmonious construction over there. Taking cue from Article 246. And another thing that what we talk about, the IGST exemption. So IGST exemption would be left redundant if we are to put this as an intrastate supply. And I think it's a settled principle that nothing in law is left redundant. You can't put anything provisions of the law as redundant. It has to give in some meaning.
Okay.
So Parliament in its wisdom, when it has given some exemption to IGST transaction where both the suppliers and recipient of the goods are outside India, and the only Indian party is the broker over here, and they've given exemption to such a transaction. So obviously it won't never be determined under section 12 for it to be like a IGST transaction.
Okay. Just just before going to the next participant, only one thing which you said.
Yes.
The exemption is there in IGST. So in case of this, Gujarat High Court had specifically dealt with this, and they said though there is on the given set of facts there is an exemption notification given under IGST, but still, because when you read, and that's what they did, they read 13(8)(b) of the IGST Act, and that's why they said when you read that and the location of the supplier becomes the place of supply, that's why it will become CGST, SGST. I am not going on. What I'm trying to basically say is that Honorable High Court read this, and in spite of that, it looks like on the reading of it that they said because it becomes an intrastate supply, that's why probably the exemption has been given there. Okay. But point rightly taken, sir. What you said, that 246(a)(2) basically talks about the law to the powers to available to the Parliament to make laws in respect of transactions which are in state force of interstate trade and commerce. I could see Rishabh has also raised his hand. Rishabh Singhvi.
Meanwhile, if Rishabh comes, I will just intervene for a minute.
Yes, sir.
Is Gujarat High Court?
Sir, I can't get you.
I think we lost his voice.
Yes, Naresh bhai.
Am I audible?
Yes, sir. Yes, sir. You are audible.
Yeah. This particular decision of Gujarat High Court is under reconsideration to the best of my knowledge. And secondly, this question, whether it is intrastate or interstate, was not a question, framed, put before the Honorable High Court. Correct. The question was only the leviability of the indenting commission received for the foreign principal. Correct. So I think that is the Gujarat High Court. We should not, maybe we may, may not give that much, weightage to this particular judgment on that count. That is the first thing. And second thing, it is very clear that it is a interstate. In my opinion, it is a interstate, and I will share only my practical experience. One of my indenting agent was paying CGST, SGST, got the notice, you have to pay the IGST. And my one client was paying IGST, he got CGST, SGST ka notice. And I have put this particular case before the, Central Board of CBIC ke samne I have put it karke. I have written to the PM office, I have written to the Finance Ministry. And it has been maybe, reminder of 5-6 reminders, 7-8 reminders. But till today, I have not received any reply from any of the authorities. So I think this is something which is, but in my view, what our Sumit has said, that makes a sense.
Right.
246A is very clear. When, in case of an interstate trade, you cannot have this local tax over here.
Right, sir.
This is what, my view is. Yeah.
Okay.
Rishabh.
Yes,
sir.
Yes, sir. I think I concur with you. So that was, I will echo what Naresh bhai has stated.
Okay. One question came in between, that how will you read subject to? So now just to basically bring another perspective to it, whether this subject to should not be read in a way to understand that if anything contrary, if it is anything contrary to the understanding what we are getting when the place of supply and the location of supplier in the same state, if anything contrary is mentioned in section 12, then you would give preference to it. Otherwise, then if the location of supply and place of supply are in same state, irrespective it is mentioned under section 13 or anywhere else, then it will become CGST, SGST. Probably that is one understanding which would be given by all those people who understand it is going to be an intrastate supply, that how would you read this subject to? Because we understand that when we read notwithstanding anything to the contrary, so we understand notwithstanding anything to the contrary means you would give preference to that overriding provision which is there, if anything contrary is mentioned there. Should we read subject to like that? And because we understand that under section 12, no situation of this sort has been envisaged, that's why I can go to section 13, identify that place of supply and location of supply are in same state, and that's why it becomes CGST and CST. Yes, Rishabh, you raised hand.
Just one point. I mean, just consider this. Either which ways, whether it is CGST, SGST or IGST, tax to nahi lagega na ispe. It will not be taxable, right?
Okay. So
I'll tell you why. Maybe correct me if I'm wrong. If it is CGST, SGST, the tax has to be determined by the recipient who is in India, which is not the case. Right?
Sorry, so I did not understand.
If it is CGST, SGST, the tax is determined by the recipient who has to be in India.
So that's what we are saying. Because you're going to section 12, right?
That's one point, right? Even under IGST tax nahi lagega. Okay. Because, I mean, it's an out-on-out transaction. The main activity is a Schedule 3 transaction. Definition says you should facilitate a supply of service. When an out and or a supply of goods, when an out and out is neither supply of goods or services, where is the question of facilitating it?
Correct. So no, Rishabh, if it is intrastate, any which way we have an exemption here.
No, irrespective of the exemption.
Irrespective of the exemption, you're saying, because once it is an out and out transaction. Correct. Okay, so there is no supply, so that's what basically
there is no supply to facilitate, no?
Correct. Point well noted, Rishabh. Okay, so only to one point. So if in the interest of time, before basically, unless there is anybody, okay, we have two hands. So I'll ask Nilesh Bhai again maybe to speak, and then probably I'll give my view and we'll go to Abhay Bhai. Yes, Nilesh Bhai.
Just a small point. Even if we read subject to in a contradictory provision, if we read that understanding, in my view, there will never be a conflicting situation arising between the section 7, 8, because it is the nature of the supply. And other chapter determine the place of supply. What I want to say, the Supreme Court, which has, it is no doubt, true doubt that ordinarily the expression subject to conveys the idea of provision yielding place to another provision or other provision subject to which it is made has been held. So we have the section for the section 12, provision has been made for this way. So I will read in that way rather than going into the conflicting situation.
Got it, sir. Got it. Point well taken. So in fact, what you are saying, I also concur to that view, that how would you read basically this subject to? The other points which have been made by the other participants regarding 246A, 2, and then how do you read subject to? Plus we have this judgment from Honorable Supreme Court also, that basically how do you read subject to? And that's what they have also mentioned in this regard. We had specifically this case of Brigadier P.S. Gill, where there was the issue was regarding how, if there an appeal has to be filed before the Honorable Supreme Court, and the way section is written, it says it has to be like the section is section 31, and that is subject to provision of section 30. So the issue was, if there is nothing contradictory mentioned in section 30, still if those situations which are mentioned in 30, they have not been followed, can I directly take as a right and I can directly file an appeal under section 31? There the Honorable Supreme Court said that you can't make subject to as an ornamental provision. And once it is mentioned, that means first, whatever situations are mentioned in section 30, you have to follow that. And in case they are not being followed, then no, you would not come to provision of section 31. So on a similar understanding, what I also understand, subject to when it says provision of section 12, and because one of the ingredients to determine the intrastate supply is place of supply, and section 12 any which way determines place of supply, and because our case is not falling under 12, hence I would not be covered by 8.2, and then I will go to the residuary category. and then it becomes an interstate supply, and then I have an exemption available, and I'll take benefit of that particular exemption. In fact, the Honorable Bombay High Court, where the conflicting views were given by both the judges, at least on this point, where one of the Honorable judge said that once he said it is ultra vires, they said 13(8)(b) read with section 8 creates a fiction, deeming fiction, which is basically which runs contrary to the provision of CGST Act. And where the other judge, where they said no, it is not ultra vires, there it clearly said 8(2) in any which way would not be applicable in given case. Obviously, because it's a split judgment, hence it would not have any precedential value in that particular regard. So as of now, what I understand, all participants have a unanimous view here. We do not have any dissenting view that it would be an intrastate supply. We would go to Abhay for his final views.
Intrastate or interstate?
Interstate. It will not be intrastate, sir. Interstate.
Okay. Interstate, yeah.
Interstate.
Yeah. See, if you see the Bombay High Court judgment, although it's a split verdict, but it is very interesting. And let me tell you why. And I have a third angle to it as to why this transaction may not be leviable to tax. See, when you see the judgment which has been authored by Justice Buyan, what he says is that look at 8.2. It says that it's an intrastate. Look at Article 286. Article 286 restricts the state. There the word state is read to be the state as opposed to the union. It restricts the state to tax a supply which is outside the state or which is an export transaction. So he then goes back to the earlier decisions of Supreme Courts to say that when you interpret the word export in the context of Article 286, it has to be read in a normal parlance. And hence, since this in a normal parlance is an export transaction, states are not given the right by the Constitution to levy a tax, and therefore there the levy fails. When he came to CGST, he said that there is an incongruity because CGST applies to an intrastate supply, but since it's not an intrastate supply, so it is in that context that he arrived at a view that on that ground even CGST would fail. Justice Ahuja, in fact, went on the basis that it is an interstate supply. He rejected the proposition that it is an intrastate supply, and then he went to Article 246A, 269A to say that there is a source of power given by the Constitution to the Parliament to determine the nature of supply, the place of supply. It is through exercise of that power that the Parliament has formulated Section 7(5), and it is in that context that if the Parliament feels it right to say that it is an interstate supply, then it has to be considered as an interstate supply, and therefore the levy survives. So basically, both the judges traveling in an opposite direction, one starting with a presumption that it is an intrastate and holding it to be ultra vires, another starting with a presumption that it is an interstate and then going to the Constitution to find a support to justify the levy. Now, obvious the matter is before would be referred to the third member as and when the Honorable Chief Justice will constitute the appropriate bench. Now, what I am submitting is this, that you cannot read the constitutional provisions based on the interpretation of GST law. It is, in fact, reverse. You have to start with the Constitution and then go down and see whether the Constitution grants the power to the Parliament or the state to formulate such laws. Now, there is an interesting analogy that we can draw with the how the law is evolved in the context of sales tax. Why it is so is very relevant to understand this expression in the course of interstate river commerce, which is used under 246A and 269A to derive that power to impose the levy. Now, when Constitution was originally formulated, the power to tax sale was in the domain of states. To avoid the states traversing their local boundaries, because under Article 245, a parliament has a right to formulate law for the entire territory of India. A state has a right to formulate the law within the territory of the state. To avoid that the state traverses their boundaries and tries and impose the sales tax on a transaction which are beyond their borders, Article 286 was conceptualized, where the states were said that, look, you cannot tax an outside state sale, you cannot tax exports. So when the Constitution was formulated, there was a clear recognition that there is a sale which is outside the state, there is a sale which is export, and there is a sale which is local, and there is a sale which is interstate. So 4 kinds of transactions were visualized, and states were given the right to impose tax on intrastate sale and interstate sale. Now, when that interstate imposition started, every state tried to fight and say that if one of the element of the sale transaction happened to be in that state, try to tax that transaction. So if an agreement is executed in the state, but the goods are basically delivered from other state to the third state, still the first state said that since agreement has been executed in our state, this is a sale on which we get the right to tax under Article 245. So to overcome all these issues, the Constitution was amended. There was a 6th constitutional amendment that was made in 1956, where what was envisaged was this, that to demarcate the sale between these 4 categories would become extremely difficult if this is left to the courts. So here the Parliament intervened. Parliament made multiple amendments in the Constitution. Under Article 286, they say that what is outside state sale, what is exports, Parliament is given the sole domain to determine. Under Article 246, there was a explanation to say that, look, state does not have a right to determine what is an interstate sale. Only Parliament has a right to determine what is an interstate sale. Similarly, Article 246 also was amended to give the sovereign right to the Parliament to determine what is an interstate sale. So based on that, CST Act came to be formulated, which clearly identified what is an interstate sale, what is an export. Interestingly, CST levy was only on interstate sale because that was the only power granted by the Constitution to impose the tax. And that revenue remained with the state from where the goods originated, from where the movement originated. Now, this was the design that we had. Now, when GST was conceptualized and when 101st Amendment was brought into place, a kind of a replica has happened in terms of Article 246A, giving the right to state and the Parliament to formulate the law on the subject of GST. Article 269 capital A to say that Parliament has a sovereign right to determine what is an interstate supply. And Article 286 again to say that, look, state cannot tax an outside state sale or an export sale. So that export continues to remain as a separate category identified through the constitutional scheme. Now we are in a situation where this is the scheme that we have, where if you see the word interstate appearing in Article 269A, in my view, it would appear as if it is a transaction which is within the borders of our country, wherein to avoid the disputes of every state, even under GST, claiming it to be an intrastate supply, a sovereign right has been given to the Parliament to determine when a supply would be in the course of interstate trade or commerce. A right is not given by to the Parliament under 269A to tax an export by saying that it is an interstate sale or interstate supply. Now, why I'm saying this is there is a second reason to this. See, when you look at exports, under the earlier regime, CST levy was only on interstate sale. So exports never came within that levy. So there was no question of providing any exemption. VAT also never could have taxed exports because under Article 286, states were restricted from imposing any tax on exports. So under the VAT laws, the entire concept of zero rating was invented only for the limited purpose of granting the refunds of the accumulated credit qua the exports. Not to tax the exports, but to allow the dealers to claim the refund of the tax that they would have paid qua those exports. Similarly, when you look at the IGST Act, we have a similar design where Section 16 creates a category called a zero-rated supply. 7.5 says it is an interstate supply, but if it is an interstate supply, then it would ordinarily attract charge under 5.1. And there is no exemption till date to say that zero-rated supply would not be leviable to IGST. Now, why charge is not there is because of the fact that we recognize that it is not an interstate sale or an interstate supply. And therefore, it's a separate category by itself where a mechanism has been formulated that if someone wants to claim the refund of the credit, then one can do so. But that supply per se would not be within the ambit of charging provisions under Section 5. Now, when we apply all this concept in a given issue, certainly the courts will have to examine as we go ahead that can in the garb of 246A, where a parliament has been given the right to determine what is an interstate supply, can in the garb of that power determine otherwise export transaction to be an interstate supply and bring it to tax? Whether that power is flowing from Article 246A is a question that will have to be addressed, because looking at the design of how the amendment has been made to bring GST in our country, it is an exactly similar design as was the case in 1956, where the entire concept of interstate was invented to avoid the states harping on each other and trying to tax a transaction which otherwise only one of the state could have taxed. And exports continue to be recognized as a separate category. Even till date, Article 286 clearly says that the state cannot impose a tax on exports. So to my mind, certainly it cannot be an intrastate, because if it is an intrastate, it would straight away violate 286. It cannot be an interstate also for the reason that under the constitutional scheme, this cannot be considered as an interstate supply. Now, they have a larger power under 246A, because 246A gives power to the parliament to impose tax on any supply which has a nexus. Certainly, this is a supply which has a nexus with the territory of India. So that power can be exercised by the parliament, but for that, they will have to create a separate category to classify such kind of supplies, which are not interstate, but are subject to tax on the ground that the place of supply happens to be in India by way of Section 30. So I think unless we synchronize all these aspects and read the entire zero rating concept, I think a view can be taken that this should not be leviable to tax. So I think, to my mind, if someone is paying this tax from his pocket, certainly one can consider paying that under protest by reserving the right to contest, because as this law will develop and when all these other aspects that we discussed, when those aspects would be considered, I think certainly courts will have to really reconcile all this entire scheme and then come out to say that it is an interstate. See, Justice Ahuja said it is an interstate based on Section 13, and then he went to the Constitution and said that, look, Constitution gives them the power to say what is interstate. Under 13.8, they are saying this is interstate, and therefore under 246A, it is interstate. I think it should be looked at from a reverse perspective. First, you have to look at what can be an interstate purely from a constitutional standpoint, and then come to CGST Act or IGST Act, and then look at it whether this particular transaction can be called as an interstate supply. So I think that so maybe we'll see how the law will develop once this matter would be heard before the Honorable Bombay High Court. But I think one can certainly consider the aspect of paying this under protest by reserving the right to claim the refunds of the IGST paid. So I think, yes, then we can then move on to the next.
Right. So very well explained, Abhay. And in fact, interestingly, all these taxes are paid out of own pocket only, generally, because the customer would not reimburse Indian GST in that case. So this strategy would clearly be helpful in that case, because this matter is any which we're going to be sub judice. So as explained by Abhay also and all participants, Abhay had a view which comes from the reading of the Constitution that this transaction would not be taxable at all. Otherwise, the view which came from the group was clearly it cannot be an intrastate transaction in this case. With this, we move to case study number 4 now. For the timing, we are not doing 2 and 3. We'll first go to 4 and then we'll come back to those case studies. This is regarding place of supply for goods. So as of now, we did services. Now we'll do goods. It has small subparts. So I'll take each subpart at a time. This is a case where it's a bill to ship to transaction. And there are not 3 parties involved, 4 parties involved in this transaction, and it's an actual transaction which probably I have also seen recently happening. What is happening in this case is, let's say there is a supplier in Mumbai, and he gets an order from a buyer who is based in Bangalore, and the buyer in Bangalore tells the supplier in Bombay to make the delivery to the person sitting in Delhi. But interestingly, the Delhi person is not the customer of Bangalore. Delhi person is actually the customer of the buyer of Bangalore. So Bangalore basically would bill to Chennai and Chennai would bill to Delhi. So the facts are that goods will move directly from Bombay to Delhi, but Bombay will bill to Bangalore, Bangalore will bill to Chennai, and Chennai will bill to Delhi in this given case. And now we are basically trying to understand that whether the provision of section 10(1)(b) will also be applicable in given set of facts, or is there going to be any ambiguity once you have 4 parties involved in given set of transactions. So first we'll do this and then we'll go to the variation. So the question is basically what we're looking for. The first answer is that what is going to be the place of supply in case of transaction between Mumbai to Bangalore, where goods would actually be going to the fourth party, Delhi, who is not the customer of Bangalore, but he is basically customer of the customer of Bangalore, that is going to be Chennai in given case. The question is whether this transaction would be appropriately covered under section 10(1)(b, or would this fall under any other category, whether A or C in given case. Two questions basically which basically we're trying to answer here is that this 10(1)(b, it starts with where goods are delivered by supplier to the recipient or any other person. So who is this person who is sitting in Delhi, whether it can be called as a recipient or any other person. Secondly, whether the delivery which is being done by the supplier to the recipient. So how do we read delivery in given case? Whether we have to link it with the who is basically causing the movement, or it is just transfer of possession which is happening in given case. So that's what we are trying to look for, that whether this transaction would be appropriately covered under 10(1)(b. And if yes, then what will happen interestingly to the second transaction between Bangalore and Chennai, where neither Bangalore will receive goods nor Chennai will receive goods. Both of them are obviously not causing the movement in given case. So whether the billing which will be done by Bangalore to Chennai, where the goods are in movement, and obviously they are only assuming, they are only passing on the title of goods on the basis of the invoices which they're receiving from the supplier at the back. And mind you, this is a genuine transaction which is taking place in this whole chain. So whether this transaction between Bangalore and Chennai will also be covered between 10(1)(b. And last part, between Chennai to Delhi, where actually goods will be delivered to Delhi, whether it will be a case covered by 10(1)(a or 10(1)(c in given case. So that's what basically we're trying to answer. Anybody who would like to initiate the discussion here? Yes, any participant? Okay. So before anybody basically brings out his or her own view, probably I will initiate that discussion by saying that in given set of facts also, in my understanding, the first transaction gets clearly covered by 10(1)(b, where the Bangalore, first of all, when 10(1)(b starts with, it talks about goods are delivered by supplier to the recipient. First, this delivery does not basically means movement, but it should specifically mean the transfer of possession which is happening from the supplier to the recipient or any other person. So in this case, the first transaction, there is a transfer of possession happening from one person to another, irrespective of whosoever is causing the movement, whether it is the first person or the third person or any other person between who is causing the movement. Second, because the fourth person, who is actually the fourth party in the whole transaction, will be receiving the goods, they duly gets classified in the wordings which is written, that is the recipient or any other person. And in this case, they would basically be called as any other person. And obviously, the person sitting at Bangalore in this case could become the third person in given set of facts. So the billing which will be done by Mumbai to Bangalore and goods getting delivered to Delhi, in my understanding, would be covered by 10(1)(b, and place of supply in that case was going to be Bangalore. Anybody has a different view? Okay. Now comes the interesting part, which is probably not seen generally. That is the second type of transaction, where both the transaction between Bangalore and Chennai, where both the supplier and the person who will be billing to the other person, both of them have not received the goods. Both of them have not seen the goods at all, but they're only just billing to another person. And both of them know that goods would actually be going to be delivered to the other party in given case. In my understanding, again, you will apply 10(1)(b absolutely exclusively again, exclusive to what has happened in the previous transaction. And again, in this case, Bangalore becomes the supplier and Chennai becomes a third party in given case, and Delhi becomes the recipient in given set of facts of the transaction. So again, because as I said, that delivery does not mean the movement. So even if the movement is not caused by Bangalore or Chennai, but it is being caused by any other person, but ultimately the delivery the constructive delivery is being done by Bangalore to the ultimate customer in given case. Hence, this transaction will also be covered by 10(1)(b) in the given set of facts. Only the last part of the transaction becomes interesting here further, that what happens to the last part between Chennai and Delhi? Will it be a case of 10(1) C of 10(1)(a)? So my understanding has always been that in case of this transaction, it has to be 10(1)(c) because supply does not involve movement of goods whether by the supplier or recipient. So neither Chennai or Delhi, both of them are not causing the movement. And hence, that's why this transaction would be covered by 10(1)(c) in given set of facts. So even if there are 4 parties involved, I don't see any problem that why the place of supply structure, which is the beneficial provision coming through 10(1)(b) would be disturbing given set of facts. Abhay, in case you have any other view or you want me to continue further.
If any participants would like to share any thoughts on the views which have been expressed by Yash.
Yes.
Yes, sir.
About the last leg of the transaction which you have stated, you say it will be 10(1)(c) you are trying to say?
Yes, yes.
So where the supply does not involve movement of the goods. So
whether by supplier or the recipient.
So why don't you read 10(1)(a), sir?
Because the transaction which is happening between Chennai and Delhi, there the movement is not basically called either by the Chennai or Delhi. It is being called by any other person in given case. That's why.
So but that is what is spotting in 10(1)(a), na?
No, 10(1)(a) is supply involves movement whether by supplier or recipient or by any other person.
So
any other person has to be, my understanding is that any other person has to be the as per the instruction of the supplier or the recipient in given case. Though the answer may not change, but the reasoning which basically I'm bringing here is this, sir.
Okay. In my view, actually, there is a movement of the goods. It is always at the instance of the customer. Whosoever is a customer, he will tell his supplier where to deliver. From where the supplier is procuring is none of his business. He is concerned with the delivery of good to his customer. And for him, only 3 parties are involved. For every transaction, you cannot take all 4 collectively, in my view. You are given A, B, C, D, but when it is transaction is between A, B and C, the D is not at all to be considered, whatever ultimately all the goods are landing at D. Because that will be at the instance of B only. See, what is A's role is to follow the instruction of B, that's all, and raise the invoice. That is how BCD will work. So in my humble view, there is a movement happening in all the cases. And with a due respect, the 10(1)(c), I am not able to digest to that extent.
Okay, so according to Rajiv sir, last transaction 10(1)(a) will be applicable. And in that case, the place of supply shall be where the movement terminates for delivery to the recipient. That would be Delhi in that case, sir. Okay, okay. Point noted, sir. Now we bring a slight variation in this case, where let's say the goods have initiated movement from Mumbai to Bangalore, and actually the Mumbai supplier actually wanted to deliver goods to Bangalore only. But during the course, so they have already prepared the invoice, the goods are under movement. But suddenly the Bangalore person said during the course of movement, I will bill to Chennai and ship goods directly to Delhi from Bombay. But Mumbai person is not aware about this in given set of facts. So first question which comes is, what is going to be the place of supply between Mumbai to Bangalore? Will it be covered by 10(1)(a) or it will be covered by 10(1)(b)? And if it is going to be covered by 10(1)(a), then in that case, what is going to be the place of supply? The address which is mentioned on the invoice, or it is going to be any other place, because goods would clearly not go to the place for which they were destined to go. Yes. So we are talking about the first transaction in this case, 10(1)(a) or 10(1)(b).
Yes, shall I?
Yes, sir. Please, sir.
So you are given a twist to this transaction. Thereby, you are saying that you go back to the diagram.
Yes, sir.
Now here you said that the Bangalore has placed the order to Mumbai with the instruction that good has to be delivered at Bangalore.
Correct.
So I presume with that kind of a case study you are putting up, that means Mumbai's responsibility is to deliver the goods to Bangalore and delivery is already started.
Correct.
Now you said suddenly Bangalore has instructed it has to be delivered at Delhi.
Or basically Bangalore did not want Mumbai to know that goods would actually go to Delhi. So Bombay has prepared the invoice for movement to Bangalore. Bombay is not aware, and during the course of movement, Bangalore tells the transporter, now don't bring the goods to Bangalore, take goods directly to Delhi. And
I think that practically this may not work for one reason, that the moment when it is being caused from Mumbai, somebody will have to cause the movement. I presume it is a responsibility of the Mumbai to cause the movement. They will raise a e-way bill.
But whether e-way bill will,
I'm just trying to put it. You need to give the facts whether transporter is raising, whether Bangalore is raising, or Mumbai is raising the e-way bill. Because e-way bill will prove that what was the intention at the time when the movement has started.
Okay, so I will make the facts even more clear. E-way bill has been raised by Bangalore only for receiving the goods to Bangalore only.
Correct. So now in that case, the responsibility of Mumbai is concerned. He know the customer is Bangalore and goods are also going to be delivered at Bangalore. And my job is, I as a Mumbai person, my responsibility, risk and reward, everything is over once I hand over the goods to the transporter at the instance of Bangalore. To ensure that the delivery is going to go to Bangalore, because I'll take a declaration also that since you are taking the goods from my factory, give me copy of e-way bill, thereby the bill is, the goods are going to Bangalore.
Okay.
Now at that instance, it will be IG applicable in normal way between, there is no three-party transaction here.
Right, sir. Okay. So you are saying, just to basically make it more clear, so you are saying that the place where it is terminating for delivery is going to be the address of Bangalore only, irrespective wherever the goods are going.
Yeah, because Bombay person has no clue thereafter.
Right, sir. Right. And will your answer change if the e-way bill is raised by the transporter or Bombay? Because what happens generally in all these cases is Bombay will raise the e-way bill. But what will happen subsequently is goods will not go, and there will be one more e-way bill which will be prepared on the basis of invoice raised by Bangalore on Chennai and shipped to Delhi. So there will be a second e-way bill on a fresh invoice which will be prepared, sir.
Yeah. So what will happen, in my view, if that e-way bill is being prepared thereafter by Bangalore, it will be always a separate leg of transaction, and they will have to give the starting point of the goods from where the movement started. Now here the movement is en route. It has already started from Mumbai and it has reached to some level. And thereafter you are changing the e-way bill, and it is being changed by a person who has never prepared the original e-way bill.
Correct. No, he will prepare a fresh e-way bill on fresh invoice, sir.
So at that time, Bangalore person has to write what is the starting point of the goods movement. So what place he will put, sir?
He will put, let's say, somewhere in Maharashtra, sir.
Fine. So now the issue here is concerned, the old e-way bill gets cancelled to that extent. And to that extent, because naturally you have to give, it is the same transaction happening, and Mumbai has to ensure that the goods are being delivered at Bangalore. Otherwise, he cannot charge IGST. He has ensured that it has to go out of the state, and his contract was also that way, and he has raised the bill. If you say, I don't have control, like people are selling the good X factory. Now I am selling the goods at X factory. I don't know where you are going to take the, goods to. You may take anywhere. But then what happened? We take a declaration from you and we raise a e-way bill. And that is the only proof that goods are going out of the state. Otherwise, I will charge you local state only, intrastate. I will charge CGST if you don't agree to this. So that is what is my, on a practical front. I am going on this because this actual transaction is happening in this fashion. Anyway, you can give your views. I have told you that on practical front, it is Mumbai only will able to amend the bill, e-way bill, not the Bangalore.
Okay. We have one hand from Nilesh Bhai. Nilesh Bhai, you have any views on this?
I have slightly a different view. When Mumbai will be raising an invoice, he will straightway raise an invoice of a IGST, because importantly, when supply involves movement, occasion of the movement, unlike under the CST Act, the word has been used occasion of movement. So I will slightly beg to differ with Raju Bhai, saying that e-way bill and everything, that is a subordinate. Once the supply is involving a movement, I will see Bangalore has placed an order. I will raise the invoice and I will close it. I will raise the e-way bill. Subsequently, Bangalore will raise the e-way bill, and by how the transaction will. Otherwise, the sale in transfer, the sale movement when sale is happening while the movement is irrelevant will be things. So practically also this thing can be happen. He will remove the invoice and he will place the fresh invoice and he will do the transaction. So I will the section 10A, it will get involved.
And the place of supply shall be Bangalore in that case.
Bangalore in that case.
Like to say, sir. Okay, okay. We have one more hand. Okay, somebody had raised hand, Mr. Deepak probably, but I cannot see his hand. Okay, okay. Yeah, so I also basically agree to what Nilesh Bhai is saying, for the simple reason that as he said that in CST we have this word called sale occasioning the movement, whereas here we have this word called supply involves movement, and wherever the movement is involved, it says the place of supply shall be the location of goods and the goods terminate for delivery to the recipient. Now, interestingly, as a supplier, how would I get to know? And I get to know this only on the basis of that what is the address of delivery, which I'm basically mentioning on the invoice. When I'm very clear of the fact that the goods are actually there will be movement involved in that particular supply. And we have this address of delivery specifically definition given under 2 subsection 2 of the CGST Act, which basically says that the address of the registered person as indicated on the tax invoice. And that, in my understanding, would be would determine what is going to be the place of supply. Once I'm sure that the movement would be happening in given case. So even if during the course of movement, if let's say en route there is a fresh invoice being prepared by B and goods are being the movement of goods being changed from Bangalore to any other place, that is going to be a separate transaction itself. But the first transaction, the place of supply shall deem to be the place where basically what was the address mentioned in that particular regard. Obviously, the subsequent transaction becomes a regular 10(1)B transaction in given set of facts, and probably in that case we need not discuss. Abhay, you have any view on this?
Yeah, see, to my mind, this first transaction, if you take it into 10(1)A, the challenge that you will face is that the proof of delivery would not be there to say that goods have been actually delivered to Bangalore. When the fact would emerge that the actual delivery has happened to Delhi. Now, I would say that, see, when you look at section 10, and particularly the fact that the entire provisions are geared towards taking the tax along with the goods in the entire chain of value addition. And when you look at 10(1)B, it is quite broad enough, where, as Rajiv sir rightly said in the earlier on the earlier issue, that the phrase any other person is wide enough and it can even cover transporter. So when you look at 10(1)B and when you say that where the goods are delivered by the supplier to a recipient or any other person on the direction of a third person, then in that situation, why can't we say that it is a transporter who has received the good on the direction of the Bangalore customer? And in that situation, then the law deems that Bangalore is the person who has received the goods. And then based on that, the transporter then delivers the goods to Delhi based on the fresh invoice and the e-way bill issued by the Bangalore supplier. So I think taking it into 10(1)B will avoid that factual issue of proving that actually the goods have been delivered to Bangalore. Because when you look at 10(1)A, the net result would still be an IGST transaction where place of supply would be Bangalore. But in 10(1)B, on factual aspect, if you lose the case, then alternately you will have to argue. Otherwise, I would start with 10(1)B as a first proposition, and then maybe move to 10(1)A if 10(1)B does not find acceptance with the authorities.
Okay, okay. And any precaution you would suggest, because the invoice which will be issued, that will obviously not have any third party involved once the first transaction which will take place, and because we'll be taking that in 10(1)B. So any precaution which you will suggest? So as a
precaution, I would suggest that the sale contract can consider having a clause saying that this is an order that we are placing, but also reserving the right that our transporter can ultimately change the course of movement, and upon our instructions can get these goods delivered to any of our further subsequent customers. So maybe that kind of a general clause, if it is there in the sale contract between Mumbai and Bangalore, right, that would suffice it for them to say that this is a case under 10(1)B.
Okay, okay, okay. Point well taken. Then we go to another part of the question. Bill to ship to transaction in case of a distinct person. Now, whether is it possible that in case of a distinct person where billing is done, let's say on the head office, and delivery is done to the branch office, it is covered by 10(1)B. And why this question basically comes up is when we read provisions of again 10(1)B, 10(1)B uses two terms where it says that the goods are delivered by supplier to a recipient or any other person on the direction of a third person. So that means there have to be three parties involved in this case. Either one of the party has to be recipient or any other person, and the other party has to be third person. Now, in general parlance, we understand the third person is actually the party on which the bill is raised by the supplier, and the person to whom delivery is made is actually the recipient or any other person. Now, interestingly, because by the dealing fiction which we have under section 25, somebody under the same PAN having two GST registration, they are treated as a distinct person. And the provision says under 25(4), the person who has obtained or is required to obtain more than one registration, whether in one state or union territory or more than one state or union territory, shall, in respect of each such registration, shall be treated as a distinct person for the purposes of this act. The question which comes up is that whether this distinct person, should we take it as a phrase that wherever word distinct person has been written, you have to treat as it because somebody having two separate registrations, or this distinct person is in the common parlance. How do we understand this distinct person? That means we can interchange distinct person with other person and third person, and suddenly it becomes a separate person altogether. And then the definition of person which we have under the provisions of the act, where it says, let's say a company, so suddenly it becomes two companies. Whether in that context we are saying this. And why am I raising this question is because this third person and other person which is used here, it nowhere uses the word distinct person. And interestingly, when you read definition of recipient also, so in case of a recipient of a supply of goods or services or both, where the consideration is not involved, the person basically to whom the goods are delivered or are made available, or to whom the possession is given, is basically as recipient in given case. So if one takes a view by saying that no, only for the limited person purpose, wherever word distinct person has been used, this instructing party at Mumbai, which is the HO, and the delivery being made to the branch, they will not be treated as other person or third person as used in 10(1)B. Then obviously the place of supply would change to the recipient where the delivery is made, that is Jaipur, even if the invoice is raised on Mumbai, and it would become an IGST with place of supply as Jaipur in that regard. Or one can take a view by saying once 25(4) says it becomes a distinct person, then for all practical purposes, it becomes two separate persons. And it will override the definition of person which we have under the provisions of the Act. Yes, any views on this? Yes, Nilesh bhai.
I will say the third person include the distinct person because the section 2 is start with in the context of. So when we read in the context of, here the context will not be applicable. How the transaction, the bill will be raised on HO, and then HO will subsequently raise bill on his branch itself. So the whole transaction will complete in that way. The schedule 1 also plays in a picture because there is a supply of a goods. So okay. I will read in third person, include a distinct person, and will not give a limited meaning to the third person.
Okay. Only when, if we go back to the philosophy of the schedule 1 entry 2, which we have, when you read the bare provision, it looks like that it talks about all types of supply, but basically the philosophy behind that was when goods are actually moving from one state to another of person having basically multiple registrations because of the scheme of GST which we have in hand. So the credit may also move, but can that be used as a mechanism for tax planning here is probably the another view which would come here in this case. Anybody has a different view here? Okay. I would also subscribe to the view what Nilesh bhai has given for a very simple reason that when this 25(4) basically it says that for in respect of it shall be treated as the distinct person for the purposes of this act, and this act would also extend to the IGST Act. So I would not restrict itself only as a phrase, but it will be for wherever you are applying the provisions of the act, it shall be treated as if a separate person altogether, and that's how the scheme has also been in this regard. And that's where this third person and other person, the concept which has been mentioned here, you would specifically not talk about only two separate legal person, but also persons which are separate under the provisions of the Act in this regard. And that's how this scheme under 10(1)(b) would be applicable in case of a transaction which is happening between a distinct person. That would be my understanding. So I would agree to what Nilesh Bhai is saying in this case. Any views to supplement or contradict, Abhay Bhai?
Just to supplement, in fact, even if you see the definition of person in clause 84, it is an inclusive definition. It is not an exhaustive definition. So in any case, one may not limit oneself to say that only the entities listed in that definition are only persons, and 25(4) fiction is not a person, so as to say. I think I completely agree with your view.
I also supplement, Yash, because, the definition given in subsection 2 are starting with the phrase, unless and until context otherwise require. But this definition is given under section 25(4). So it is not, basically restricted by the words, unless and until context otherwise require. So I think, for entire act, you rightly said that this definition has to be followed.
Point taken, sir. So there would not be any problem in that regard, and they can bill to head office, and then head office can basically bill it further in that case. Okay. Last point, though an issue which may be very trivial in nature, but only for a very limited discussion. Let's say somebody is importing goods from outside India, and when they're importing goods, so in the bill of entry, what happens is bill of entry is prepared on the basis of IEC. So let's say in their IEC, they only have one address, that is address of their head office, which does not have a GST registration. But all the payments and everything are basically being done by the head office. Now, what happens in the bill of entry is when they write GST number, they write GST number of the state where the plant is located. So now in the bill of entry, the address of the importer is the registered head office in Delhi. The address is also mentioned of Delhi, but the GST number is that of Rajasthan, which is mentioned in the bill of entry. Okay. And the payment for all the duties and everything else, and also payment to the supplier, is made from Delhi. Now, the provisions for place of supply in respect of import of goods says is basically the address of the importer, which is there. When goods are being imported into India, the location of the importer shall be the place of supply. But obviously, the goods from the port are not moving to the registered office, they are moving to the plant location. So it looks like the error is because somebody did not update their address in the IEC of the particular plant. That is why they did not have that option in the bill of entry where they could have mentioned the address of the state where they have a GST number. Now the department is saying is that because the place of supply is the address of the importer, which is Delhi, in this case, the place of supply shall be Delhi, and in that case, you should have actually taken the registration in Delhi and then raised an invoice from Delhi to Rajasthan. But interestingly, GSTR 2B, because it is linked with your GST number, it will show credit in the state of Rajasthan. So is this just a procedural lapse, or on the basis of the scheme of law which we have in hand, anything can be done in this regard? Interestingly, what I have been told is that the amendment in the address in the bill of entry after a certain point of time is not possible at all. Okay. Any views on this? Any views on this? That the first thing is that whether the place of supply shall be Delhi or Rajasthan. That's question number one, where the factual situation is that from the port, goods will actually go to Rajasthan, but they will not go to Delhi. But bill of entry has address of Delhi. And second, whether the credit would not be available in Rajasthan because of this POS problem which is there, because the address of Delhi is mentioned in the bill of entry. Mind you, bill of entry is a document which we file. So it's on the self-assessment basis, basically, which I'm doing that. Yes. I would request participants to be a little more participative so that we can have variety of views in this regard.
Yes, I believe, IEC code is all India one IEC code only.
Correct,
right?
sir.
You don't have the different IEC code for different states.
No.
And once
it is handling, sir.
And again, once the CH agent puts my ICC code, all other details are pre-auto filled. It's auto filled.
Correct.
I don't have an option to put. Suppose if I am registered, I'm having my IEC code number, and I don't think IEC code number we have perhaps for applying the IEC code we have that like provisions where additional place of business and all the things we can.
No, they are in the IEC. You may put additional places of business in the IEC, sir.
Okay. So it is that provision is there.
Yes, it
Suppose
is.
if I want to put IC code and my address, is there any possibility? Because I am being told by CHA, that once I put IC number, wherever I am registered, that address will come in the bill of entry. So I am not very much conversant with the custom procedures. So I don't know, but somebody, if he knows about it.
Somebody has written that is hypothetical example because all addresses should be mentioned in IC, and that's what I am also saying. And sir, actually what happens is once you have all the addresses, you may pick the address which you want to basically put there.
Okay.
In the given set of facts, what we have is only one address is there in the IC. Somebody has not updated the IC there. Somebody has mentioned that there is an amount of 1,000 rupees of penalty for not updating the IC within 90 days. So you may change it. So all of that can be done, but that will be post facto. The point is bill of entry has already been prepared and you already have an address which is mentioned of Delhi.
And this issue has come out of 1 year, correct? Aisa samjho na. So
audit has picked up this issue.
Yeah, whether you remedy or not.
Yeah. Yes, Rishabh.
I just wanted to put down the issue, if I've understood correctly, is who's the importer, correct?
Yes,
am I
yes.
Okay?
Correct.
And the problem is distinct person concept applies only to CGST law. Importer is not defined in CGST law but defined in the customs law.
Correct.
Customs law understands importer as a legal entity and not a fictional entity. Is this the problem statement?
Correct, absolutely, sir. And because the address which is mentioned in the bill of entry is that of not of that state whose GST number is mentioned.
And the address of the correct. So number is of Rajasthan, but address is of Delhi.
Correct.
Barabar, na?
Okay. Correct.
Fine. So, theek.
No, what is your view?
No, I mean, I only reached the problem statement. I think by your next session, maybe we will get some development.
Okay, somebody has mentioned.
Very complicated thing because you have two laws interacting here. One law recognizes places a fiction on artificially splitting a person.
Right.
There's another law which does not split it, but only treats a legal entity as a person. So that's the direct head-on conflict between these two.
Correct.
Now, and
somebody has mentioned in the chat, it is a place of supply shall be Rajasthan. Place of supply shall not change if payment is made from registered office located in Delhi. Yes, Rishabh. You were saying something. Sorry, I interrupted you.
I mean, so basically, there's a head-on conflict in applying to this fact on two laws.
Okay.
So, I mean, that's where I would see it. So, I mean, I don't have an immediate answer, but.
Got it. Nilesh bhai, you have any view on this?
The credit part of it, we can deal with slightly differently, I feel, because credit, again, we can say the goods has been received and everything has been there. And the rule also says the other conditions are there, the other changes can be ignored. Having said that, the place of business is a Delhi to be considered because that is a registered place of the business. And under the place of business also says the books of account where has been maintenance is also considered as a place of business. So Delhi, whether they are doing business operation or not, it will not make more sense. But their place of business will be at the Delhi. The importer-exporter address has been mentioned. It should be treated as the goods has been constructively received in a Delhi. And that has been a transfer subsequently to the Rajasthan. So I will read in that concept. Third party, a tripartite arrangement, but the goods has been received by the Rajasthan.
And then you will say
Delhi.
Then you will say Delhi should take registration and pay tax.
Yeah, Delhi should take the registration. In any way, Delhi should take the registration because they have a place of business there.
Okay. Procedurally, that will be too much of a problem because credit will appear in 2B of Rajasthan. It will not appear in 2B of Delhi. Then you would have to contest the matter that 2B would not stand in given case of case. But I've noted your point. Just to quickly sum up, because we have other questions also, my understanding would be in given case that it's a procedural problem, but substantively because I always intended to basically bring my goods to Rajasthan. It's an error which I have done in my bill of entry of mentioning the wrong address. The correct procedure probably in this case should be that I should file a request for the amendment in the bill of entry for the address. If that is allowed, that would probably solve the problem. Even if that is not allowed, still I will continue to claim credit in the state of Rajasthan only, because procedurally the law would also flow in this way, because on the basis of GST, and the credit would appear in my GSTR2B. Though GSTR2B would not be the deciding factor what should be the place of supply in this case, but I always intended to have my address, the location of importer in given case would be the place where I intended to import, but not the place which has been wrongly mentioned in my bill of entry in given case. So I would prefer to claim credit only in Rajasthan, but not to go to Delhi, just because there is an error in my bill of entry in that case. Abhay bhai, you have any different views in this case?
So just a couple of points. I think, when you look at section 11, it talks about location of importer. Now that phrase has not been defined, but we have a definition in the context of services. If you see that definition, it clearly says that it is a location where you are actually receiving the supplies. So applying that same proposition, we can very well say, even under section 11, location of importer has to be Rajasthan, the unit which has actually received the underlying supply. And one can also take recourse to...
Sorry, Abhay, I'm interrupting, sorry. Only problem, if you apply that analogy, if the payment is made from Delhi, then whether the answer will change?
No, I think answer should not change because it's an import transaction. So in that situation, I think a payment made by, ultimately it's a legal entity which is making the payment from a bank account.
Right,
Just because that bank account has been opened indicating a Delhi address cannot imply that it is the Delhi office which has actually received the underlying supply and therefore would be the location of importer.
Okay.
So that is number one. And number two, I think Rule 36, if you go to proviso, it takes care of a situation where it says that as long as GSTN is there, then it does not say that address also has to be there. That can be ignored by the authorities if in substance, if it can be established that the goods have actually been received, as is the case. So I think not updating IEC should not really hamper my claim of credit or the determination of place of supply.
Correct. So at least the ITC part would be taken care by 36(2) in this case. And I think that's the only thing which would worry the importer first, rather than department issuing a notice on Delhi for making a supply from Delhi to Rajasthan. Okay. So with this, we go to case study number 7, and that's basically the place of supply issues in respect of services, whether they are directly related to immovable property or is there any other type of service which basically would be covered here. So the facts of the case are...
Yes, sorry to interrupt. I think we have maybe half an hour or 40 minutes odd. So maybe now quickly we can just go through the issues and maybe you can share your insights, and then maybe if one or two participants, if they want to contribute.
I'll take care of it. Yes. So in this case, where generally what happens is where there are exhibitions or fairs or of anything of that sort happening, where people from outside the state come and participate in an exhibition and they exhibit there. The question is, when the person who is basically taking that fee for allowing the exhibitors to come and participate and allotting them stalls, what is going to be the place of supply in that case? Whether it will be covered by the provisions of section 12(3), which says that services directly in relation to immovable property, or it will be covered by provision of section 12 subsection 7, that is organization of cultural, artistic, sporting, scientific, educational, entertainment event, including supply of services in relation to conference, fair, exhibition, celebration, or similar events, or it will be covered by 12(2), that is a general provision, that is what is the location of the recipient in that case. Now, basically, the facts there are three possibilities which may occur. One is where somebody who has only been given a place in that exhibition, and he has been given a predefined area in the exhibition hall, and no other service has been given to him. So they have been allocated a predefined area which has been specifically enmarked or demarked for them, and they may decide basically what they want to do there. The second set of facts is where the amount is being charged from them, where they are told that they'll be allowed to exhibit, but they have not been committed any specific space as reserved for them in advance. But yes, they do have a right to participate in the exhibition, and they will be allotted a stall in that particular case, but no other service as such has been given to them. And third category is where somebody who says that you will have a specific space, or you may not have a specific space, but it comes with along a lot of other ancillary benefits, like, for example, having that temporary structure being provided by them, security, power, telecommunication machinery, and a lump sum amount in that respect is charged. So in these three set of facts where all three are services, amount is being charged by the person organizing the exhibition, what shall be the place of supply? Now, interestingly, when we read 12.3, in my understanding, it says directly in relation to immovable property. And that's where the question which comes up is, what is covered by 12.3 when it says directly in relation to immovable property? Where the word directly is very specific to the immovable property, and in relation to how do we interpret is basically liberal. So direct is where we are talking about a direct connection, and in relation to we are seeing some sort of a nexus in that regard. And there, if basically we try to understand this with the other types of services which are mentioned in 12.3, it looks like that the subject matter of service itself has to be the enjoyment of the immovable property at first. But for basically enjoying that particular service, immovable property should not be ancillary in nature. And once we are able to establish that, only those services where immovable property in itself is the deciding or the pivotal point of basically delivering the service or enjoying the service, then only the provision of 12.3 would be applicable. Otherwise, there are other sort of services for that the presence of immovable property may be mandatory, but it would not be the pivotal point on the basis of which one may basically claim the benefit out of it. And that's where in the three set of facts basically we had in the question, where in first case where they are giving a predefined area. In second, they are not giving a predefined area. And in third, they may or may not give a predefined area, but will have other ancillary benefits out of it. My understanding would be that the first case may fall under 12.3. And in other two, even if there is a predefined area given or not, in third category, along with ancillary services. Second part, where they do not have a predefined area, that clearly falls under 12.7, where somebody is organizing a particular conference and exhibition. And in respect to that, they're allowing somebody to exhibit. And in that regard, they're charging a fee. So that would be covered by 12.7. And place of supply, in case the service is given to a registered person, shall be the location of that person. Otherwise, it shall be the place where that exhibition is happening. And the last category in this case, where even if they have a predefined area, they may not have a predefined area, but it comes with other packages of services which are important basically to facilitate them to exhibit their goods or services in that particular conference or an exhibition which is taking place. There, in that case, the service may have an element of an immovable property, but it comes as a package, and the specific categorization where that service should specifically fall, more specifically, would be 12.7. That is services in respect of a conference or a fair, rather than basically considering it from the point of view of that it is service in relation to immovable property. In given set of facts, I really do not foresee why any of these services would fall under 12.2. Just to take support in reference to basically what I'm speaking in respect of this, there is a judgment on similar set of facts in respect of BCJ, where this Intermark group, where similar sort of question arose, where if somebody is basically giving a space for advertisement in an exhibition, or somebody is giving a space only without giving any other benefit, and somebody is giving space along with other ancillary services. There, the view was because the enjoyment is not, the purpose is not to enjoy the immovable property, but basically the purpose is to participate and allow somebody to exhibit their themselves in that conference. So immovable property is ancillary in nature, and the enjoyment of it, that's why it should not fall under services in respect of immovable property. And then we have VAT notice 741A. Basically, it's a view by His Majesty Revenue of Customs. Their understanding of that what shall be the place of supply in respect of services directly related to land. There also, they have basically come out with a view by saying that only where the land is incidental component of the more comprehensive services, then the service would not fall specifically in respect of 12.3. Abhay, I can see somebody has mentioned in the chat, Rushil. Rushil, in case you want to speak basically what you have mentioned, you've written a long text. If Rushil, he has written the nature of service does not seem to be that of immovable property related services. The services provided along with space being minor element provides the entire atmosphere. It would market the event and ensure footfall. So irrespective of the alternate, in my view, should not be immovable property related to as only one small ancillary aspect. Yes, Rushil, you want to add something?
Yeah, sorry, I was not able to unmute earlier. So that's what I think, what you've just read out. So basically, irrespective of the alternatives that you've just mentioned, and I think the clarification also that you're just reading out, Okay, so immobile, giving the space or allowing the user space only one minor or ancillary aspect of it. When I'm organizing an event, someone is organizing an event or letting you exhibit their products. So they would themselves market their event, provide that atmosphere. They would ensure that, a lot of crowd is coming in, ensure certain footfalls, etc. So it's way beyond just merely allowing you to use the property, but it's the entire atmosphere, the environment that they create, which is being provided to you, where you are able to exhibit your products. So
that's why you are of this view that it will be covered by 12.7.
No, 12.7 also, it's like those cultural and artistic and sports events kind. This is more of a business event, which in my view does not get covered in that 12.6. And this is not event organizing. I was on 12.6. So 12.6 also, I don't think it gets covered because that is more in the nature of entertainment events. Because if you see the kind of words used over there, a business kind of an event might not get covered over there. So I would say that it would go on the...
Sorry, yes.
No, so in my view, it would just go in the general category or the maybe the recipient base and get taxed as per the location of recipient.
Okay.
Yes, I will say that 12.7a is a very specific category, and specific category will prevail over the general category. Use of the immobile property could be in the theater also, drama theater also. You are occupying the space,
Correct.
So it's only incidental. And when you have the specific category, which is 12.7a, which says that conference, fair, exhibitions. So exhibition means business exhibition also, because it is inclusive. So in my opinion, 12.7a is a specific category. So legal argument could be specific prevails over the general,
Right, sir.
Yeah.
Okay.
Just to add, basically, if you go to the Service Tax Education Guide, if you go to para 5.5.4, where they are saying that in this context, that if the idea is to have a comprehensive supply where a property is an incidental element, then it would not be considered as directly related to immobile property. And as Rushil rightly pointed out, someone when takes a space in an exhibition, the idea is not to enjoy the space per se, but to participate in that exhibition, to exhibit his product or services. And there is a whole gamut of supplies that he is intending to avail when he is basically availing those services. So I think 12.7a is wide enough to cover any service which is in relation to an exhibition. So even in the first case, I would take a view that it should go under 12.7a.
12.7a.
And even immobile property means, there has to be a permanent kind of a thing. These are temporary structures. And we have in that service tech days, we have the judgment where the film set has been made. So whether it is interior decorator services or not, so there also they will say it's not interior decorator services. There's no permanence and other things,
Right.
So the interior decoration has to be on the immobile property. Something which is not permanent, it cannot be immobile property.
Okay. So the majority view is that it shall be covered by 12.7a.
Yes, specific category.
And all three types of transactions would be covered there.
Yeah.
Okay. Then we go to second aspect in this case. So let's say I have a factory in Rajasthan and I have a customer in Chennai. And whenever he places an order on me, it takes, let's say, 3 to 4 days to deliver goods from Rajasthan to Chennai. And that's why I decide to basically store some of my goods in Chennai. Now, there are two possibilities which I have, where first is I'm given a warehouse space where I have a right to I have a right to access to the specific area. A specific area is identified of a storage area for my exclusive use only, and I have a right to access to basically to store my goods there. And second category is where again but in first category also there is a warehouse or a storekeeper there. In second category, I have been allowed to store my goods, but that has not been given exclusively to me. But my goods are duly stored there, and I have not been given any specific right, basically, or exclusive right to enter that particular area. But obviously, I can access my goods, I can get my goods deposited there. Now, in these two types of situation, what is going to be the place of supply? Whether one can take a view by saying that the first category of services where I have a right to access and the space has been given specifically to me, but obviously there is a storekeeper or a warehouse keeper and a manager taking care of it. It is a service in respect of directly in relation to immobile property covered by 12.3. And the second category B is not a service which is directly in relation to immobile property, but it is service specific, more of a storage of goods kind of a services, where again, as everybody pointed out, that the purpose is not to enjoy that immobile property, but basically to get my goods stored there. And if one takes a view that the A case is covered by 12.3, then whether it becomes my place of business, and if it becomes my place of business, that whether I'm required to take registration whenever my goods are basically getting transferred from Jaipur to Chennai here, and it becomes a distinct person for me. Whatever I have said, my understanding is that this case A is a service directly in relation to an immovable property, and it will be covered by 12.3 here. And in case I do not want to fall into the problem of the administrative problem of claiming credit and all those things, I would be actually required to take a registration here, claim credit of it, and pass my goods from there to here. Whereas in case of B, where I do not have access to the immovable property as such where my goods are being stored, and I do not know the specific dedicated area where my goods are stored, but I know the overall place where goods have been stored. It's a service, storage services which I'm getting, and it will be covered by 12.2. Any different views on this? Abhay, you want to add something?
No, I think we can move.
Okay, we go to last is very interesting, which generally people do, and we have to check how much valid is this. Let's say a company wants to have an offsite of employees in Kashmir. The company is based in Maharashtra. It reaches out to a tour operator in Maharashtra only, where they have a pre-identified hotel in Kashmir. They want that tour operator to book it. Tour operator approaches to a tour operator or a travel agent in Kashmir only to book that hotel. So hotel bills to the travel agent or a tour operator in Kashmir, and the tour operator in Kashmir bills to the tour operator in Maharashtra, and the tour operator in Maharashtra bills to the company who will ultimately consume the service. First leg and the last leg of the transaction, both of them are saying, first leg they are saying it is 12.3 clearly, hotel accommodation service covered by 12.3. Last leg they are saying supplier receiver both in Maharashtra, and this is not a 12.3 case. It's a service of a tour operator given. So the place of supply will not be Kashmir, but it will be Maharashtra C&S. And the tour operator is a trading in service of a tour operator, not directly in relation to immovable property, and hence it becomes IGST. And that's how the chain of credit will flow from Kashmir to Maharashtra. Irrespective, all of them are only basically booking a hotel. But the two tour operators in middle are basically saying that we'll book the hotel for you on a principal to principal basis. Is this planning correct in this regard? My understanding is that it would not be a proper understanding of the provision of 12.3, because if all of them are doing this on a P2P basis and the property is pre-identified, this is a service of providing a right which I have in respect of hotel accommodation service, in respect of an immovable property which somebody has taken on a P2P basis from a hotel, and that is being transferred. The place of supply has to be determined on the basis of 12.3, and it cannot be determined in the common parlance in respect of 12.2 between tour operator and the person who wants to take benefit and the another tour operator. Is there an alternate approach also possible basically to make this transaction work and pass on the credit? Yes. Any views on this? Abhay, you want to add something to this?
Yeah, so basically I agree that on a P2P basis, but actually when you see the fact, basically all these tour operators are only taking an obligation of arranging the booking. They are not taking any obligation of actually providing any accommodation service. If tomorrow, if let us say if there is a breach in the contract in terms of whatever you wanted and what actually happened, you cannot file a case or a suit against a tour operator, as he has not taken any obligation as such to provide accommodation service. So actually there are two supplies here which are involved. One is an accommodation service, another is a service of arranging the booking. So better way should be ideally to go and structure a transaction as on a pure agency basis, where a tour agent can charge a separate consideration towards the service of arranging the booking. To that extent, certainly it would not go under 12.3. Otherwise, hotel accommodation clearly, whether done by hotel or by the tour operator, should go under 12.3. But the fact is that tour operator cannot really provide the accommodation. So that's why better way is to really have a split in the transaction.
Basically, what you are trying to say is that practice of taking that price, whatever hotel is charging, and adding your margin to it and billing it further at a lump sum rate of 5% or 18%, whatever being the case, may not serve the purpose. because ultimately it will have one component which would be covered by 12.3, but better his own margin on the tour operator, if he may identify it separately and bill, then probably that can go under 12.2. But the ITC in respect of hotel accommodation would be covered by 12.3 only. Correct? Correct. Okay. Anybody, if they have any other view? Okay. Okay. Then we come to a very interesting issue, case study number 9, place of supply of molds. And that's a issue basically being faced by automobile industry in respect of manufacturing of any high-end machinery, mobile phones, where molds are required. So let's say there is a company which is there in Haryana, one state, and they want to get some goods manufactured from another person. But the person who is going to manufacture the goods, he will first of all basically develop a mold on the basis of the understanding of the technical requirements. Then that mold, he will first of all bill it to the person for whom he is going to manufacture the goods. But obviously that movement of goods would not happen, because ultimately he has to use that mold to manufacture goods for the person for he's manufacturing it. The question is that billing of mold, which will be done by company B to company A, and let's say both of them are in separate states, what is going to be the applicable tax? Whether what is going to be the place of supply rather than applicable tax? What is going to be the place of supply? And how can the person who is getting the goods manufactured, or basically getting the billing of mold, would be able to claim input tax credit of it? And we would also like to discuss the variation. If let's say the person who has placed the order for getting the goods manufactured is sitting outside India, and I am the person sitting in India who is going to manufacture it, whether I can claim benefit of zero rating or export of goods, or whether can I say it is an export of service, and that's how I'll be able to claim benefit of zero rating. Any views in this regard before basically I or Abhay give our own view that how this transaction should be structured so that credit may flow to the ultimate person who will be the beneficiary of that mold billing which will be done? Is there a way possible? Because in common parlance, if one would look at it, mold ultimately being a transferable property, it has all attributes of a goods. And because when I will bill from state A to state B, then in that case, and because no movement of goods would be happening, it would be case of 10(1)(c), and the place of supply shall be location of goods. And then in that case, because it will be the same premises of the person who is manufacturing the mold, so it will become 10(1)(c) transaction, CGST, SGST, intrastate supply. If we look at from the context of the person who is sitting outside India who has placed the order, again the answer would remain same in that case, because in the export the requirement is that goods should move to a place outside India, and because goods would not be moving outside India, that is why the problem would be that it would not tantamount to export of goods. And once it is not, the benefit of zero rating which we have under section 16 in respect of export of goods would not be available, irrespective of the fact that the currency would be received, and we will receive amount in foreign currency. Can one give it a color of service? Is it possible to say that it's a service which is being given by the person who is manufacturing the mold, when ultimately he'll be using that mold to manufacture the goods? Can one take that argument? Or it is a composite supply, goods, service, both, and principal being the service in that case, and that's how we are going to take it in 12.2. Any views in this regard from anybody?
Can it be done on the job work basis? So the mold manufacturer, he says he's only a job worker. The material is supplied. The material bill is made by the vendor in the name of that principal.
Right.
And labor job work is done over here. So in that case, that principal gets the credit of the material also.
Right.
And he gets a labor job also, they get it karke. I think that could be one of the way out, if it is planned properly. But the only thing is that the margin of the manufacturer, that will be perhaps exposed.
Right, sir.
But generally what happened, the client will always consider, I am getting the mold on this much amount, whatever bill that you want to give it in my name from the vendors, and whatever he gives the job work, he's happy in getting that credit.
Right.
So that works out. Practically, this is being worked out in this manner.
Correct. So what Naresh Bhai is saying is that whosoever is manufacturing the molds, the goods are basically the raw material in this regard is being built.
And technically also the property of the mold is that of the principal only, you know. So this makes sense, you know, the material come in the name of the principal, labor job, so that he can capitalize his mold in his books also. The principal can capitalize the molds in his books also.
Okay. Rushil is saying why this cannot be seen as a normal cost plus arrangement. Rushil, would you like to elaborate what you're trying to say?
Hello. Am I audible?
Yes.
Hello. No, so what I'm trying to say, so this B is manufacturing goods, and in the course of manufacturing goods, it requires molds, correct? Obviously, the question is not very clear as to who would have the ownership of those molds, but the very fact that the molds are never moving out. So this is a cost that I'm incurring in manufacturing goods, correct? And it is anyways incorporated into my sale price. So why can't this be seen as a normal cost plus arrangement? There is only one supply happening, that is of those goods manufactured by B for A. Okay. Assuming over here that the property of molds is with B.
Right. Got it. So basically what you're saying that in the value of the goods, which will be ultimately after manufacturing supplied back to the person who has placed the order, why can't the cost be factored in that particular supply only rather than doing it a two-way transaction?
Correct. It can be seen as a normal input or input services that I require to provide my supply.
Okay. So point taken. So yeah, there are 3-4 possibilities. One is
amortization of the mold cost, correct? That is the
amortization.
Yeah. That is the standard process in the industry.
Okay. So yeah. So these are 3-4. One last we have already discussed that this amortization possibly would solve. One is the suggestion given by Naresh Bhai, why not to take it on a job work basis where he only bills for the services and goods are basically billed in the name of the main person. And one is obviously the traditional method, but obviously that would incur cost. That is back and forth movement. First of all, sending the goods there and bringing it back here to ensure that the credit is taken care of. Or one, basically splitting the value between goods and services, which Naresh Bhai had already discussed. 2 points that I had mentioned, but because in the paucity of time, I'm not taking that because they are not practically possible. Abhay, you want to add something and also the international flavor to the transaction, because outside India, what I understand, in other countries, there have been zero rating benefit given to these kind of transactions in UK and other places.
Right. So I agree. In fact, a lot of planning is possible. What Naresh sir said is possible for domestic transaction. For exports, amortization would be a preferable approach, and even the customs valuation rule would support that proposition. So internationally, in fact, we have made one representation to the Finance Ministry where we are saying on the basis of the Molds and Dies Association, where we are saying that internationally, largely the countries which are more into manufacturing, including China, have a separate provisions in their domestic VAT laws to say that this amount would also be zero rated, subject to certain conditions that the mold should be exclusively used for exports only. The moment you divert into domestic use, then there are rules to basically provide for taxation in that context. So we have given a representation. Let us see what happens. But till that does not see the light of day, certainly the options that we discussed are required to be considered. There is one decision of Tata Johnson Controls. It's a Bombay High Court decision, wherein the High Court has arrived at a view that the customer is not interested in assuming the ownership of the mold. Customer is interested in actually getting components manufactured out of the mold. So they looked at the definition of sale price and they found that any incidental charges to the sale transaction are also part of that sale price. Therefore, this should receive the same tax treatment as the component. Even in section 15, we find that there is a provision which says that any charges incidental even before the supply commences are required to be considered as part of the main supply of components. So on that basis, also a case can be developed that it can be an interstate or it can be even zero rated transaction.
Correct. So basically what we understand up till now, we do not have provision like what Abhay was saying. And in fact, I mentioned it on the screen also, like in UK VAT, they have a specific conditional basis. They give zero rating benefit to this machine tools and molds. Up till then, we don't have that. Probably the suggestion given by Naresh Bhai and Rushil, we might have to consider that for the purpose of claiming the benefit here. Okay, we'll go to last few questions. We are at the fag end of the session. So we'll go to case study number 8. Very interesting question. It is regarding the location of the supplier. So the question is, let's say somebody has been awarded a works contract, and works contract has been given where, let's say, they have to supply electric meters and they have to install the electric meters also. And let's say that supply plus installation has to be done in the state of Odisha. The contract has been executed with the company at the head office, and maybe for the timing we can understand that the head office is located at Bombay, but the company has a manufacturing plant at Uttarakhand and they have their team stationed at Odisha who will be doing the installation. So the meters manufactured in the Haridwar Uttarakhand factory, they will be moving directly to Odisha. And in Odisha, basically the team sitting there, their own team sitting there, they will do the installation, and ultimately it will be finally affixed and become a permanent affixation. So basically it will convert into an immole property. So we're not in that dispute whether there'll be a permanent affixation or not. The contract says that it is a works contract. Contract says that under the same contract, one contract only, they have to supply goods and services both, and they have to get it affixed. There is a cross-fall breach also in that particular contract only. And then, but they have split the value there. The value of goods is identified, value of services is identified. And now the customer interestingly is saying, you may bill to me from Uttarakhand for goods portion, and you may bill to me from Odisha for the services portion. So for installation, you may bill to me from Odisha. For goods portion, you may bill to me from Uttarakhand in this case. Now the question is, what is going to be the location of supplier? Whether we have to read provision of location of supplier of services, we have to read provision of location of supplier of goods, or we have to read location of supplier of services, of both. For goods portion goods, for services portion services. Interestingly, we are saying it is a works contract which is under GST under Schedule 2. It is one contract, and in case of one contract where goods and services both are involved. And because it's a composite supply, and ultimately it has to be service in that case. The question basically which is arising here is that when you read definition of location of supplier, A, B, C, D, ultimately it all amounts to say that there has to be only one location of supplier. There can't be two two locations from where billing would be done. But the parties have agreed that that's how the billing would be done. Now, because both of them have agreed, and again, it is under the provisions of Indian Contract Act that would not be invalid, whether under GST the position would change. Is it a requirement to do billing from one place, or can they do billing from two separate places, or whether it will be location of supplier of goods at one state and location of supplier of services at another state? Any views on this? Anybody would like to give his or own view before basically?
I'm sorry, I'm not very clear on why we have concluded that this will be services only.
Okay, so you are saying these are two separate supplies under one contract.
Why are we concluding that this will necessarily be services and that the works contract services? I mean, is there any particular reason for that?
No, because ultimately there is one contract only which has been entered, and ultimately because there is a cross-fall breach and goods and services would be supplied, and ultimately the goods have to be installed permanently there. But just that parties have agreed that you may bill to me from this place for goods and bill to me from this place for services. So just by billing it from two separate places, whether the nature of contract will change.
Okay.
Yes. Yes, sir.
Can I chip in?
Yes, sir. Please, sir.
The first and foremost, you said there is a one contract. Yes. And the contract, I am sure it's supposed to be not only supply of good, but it has to be in an installed capacity. So yes, actually it should be entire plant or whatever, a works contract, entire transaction has to be done. Right. Now, in that case, if the transaction is single, contract is single, the party have no choice of deciding whether to raise two bill in that case, because then you have to go by what is the law governing it. Right. Now, this transaction vis-a-vis is a works contract. I don't think you will have option available whatsoever under GST law to raise a two bill, even if the party agrees. And the one who is supplying the goods, if he raises the invoice, I don't think the contract was given that of raising the invoice, supplying the goods only. The contract was for entering the services, which include goods. So in my view, two invoice, even if they are raising, is not a correct this thing. Although under Indian Contract Act, there may not be a bar. But under the GST, this is one transaction and there has to be one invoice only. The one who is doing the service or the one to whom the contract was awarded will be the one who provides works contract service in this transaction, and he will only raise the bill.
Okay. So what Rajiv sir is saying that this is not possible under GST and there has to be only one invoice, and you would read provision of location of supplier. Basically, the purpose of raising this question, somebody has raised a question, should we first deliberate on first cues posted as to whether it is a works contract service or not? Okay. So somebody is basically raising a point that it may not be a works contract. For the time being, we are not going into the classification dispute. Just because the billing has happened from two different locations, that may not be basically a deciding factor whether it is a works contract or not. You have to read definition of works contract, and as Rajiv sir rightly identified, ultimately it is one contract where goods have to be given an installed capacity. We are for the time being proceeding on the basis that it is a works contract. The purpose of basically putting this query was, when you look at what Rajiv sir is saying, that ultimately you have to find location of supplier. A says supply is made from a place of business for which registration has been obtained. B says where supply is made from a place other than the place of business for which registration has been obtained of fixed establishment elsewhere. Now, can there be a question to say that B would only cover those places which is a fixed establishment but not registered under the provisions of the Act? Meaning thereby, if let's say I am in two states and in both the states I am registered, then technically that means the situation of B of B will never arise, because I am registered in state A also and I am registered in state B also. And then in that case, I will go to basically C, and because I'm not in a state to identify that which is the location which is most directly connected, because I have a clear distinction in that particular case. That's why probably I have to go to the fourth, which is the usual place of residence of the supply. And the usual place of residence, again, in this case, would technically be the place of where the contract was executed of the company, which is probably the third stage in that case. That was basically the purpose of putting this query, that how would you interpret B? Because once you say fixed establishment would include a registered place of business also, then maybe the answers would come accordingly. So that is basically the issue here. My understanding probably in this case would be that if one wants to basically decide legally that they want to bill separately and they want to do it, I would go on the basis by saying that it is possible to do so even in case of a works contract where it is clearly identifiable that from which location what billing would be done. Considering the fact that both the parties, the supplier and the recipient, have mutually agreed, and obviously it's a legal transaction in that regard, the nature of the transaction would ultimately remain a works contract only, but there can be billing from two distinct persons in that particular case. Obviously, what I say would contradict to the understanding which we had in the second case study, which we discussed, where we said that in case of GST, once we say it is a distinct person, that distinct person has to be for all the provisions of the Act, and then that becomes a two separate suppliers in that case, and then it would not be works, and then it would not become a works contract once you have two parties there. But then again, the manner in which works contract definition is there, it starts with a contract, and a contract you can't read on the basis of how persons have been bifurcated under GST. So that's my understanding out of it. Abhay, you want to throw some light, your understanding?
I completely second that. See, on both the aspects, I think this location of supplier of services definition would be there in the state from where the meters would be supplied, and also in the state law from where the installation activity would be done. So, qua the activity, I think billing should be possible. The nature would remain as a works contract, because works contract talks about transfer of property in goods. Now, that happens from one legal entity to another legal entity. A distinct person fiction cannot be read into that definition to say that meter is only a sole property of the factory from where the dispatch happened. So only a works contract can happen only if that factory would undertake the installation work. Even a branch can be given that obligation to undertake the installation. So I see that invoicing can be done. The nature would remain as a works contract.
Okay, perfect. So we move ahead, and toll collection, I think is a similar sort of question. So we can skip this, Abhay, where we had...
Sorry. I am slightly, lost in the last question. The
yes,
last
sir.
ultimate conclusion is the factory will bill for the goods and the Orissa will bill for the services.
No, no. Both will bill for works contract.
Both will
It's
be
a
for
service.
services only, though they will dispatch goods, but it will be as a works contract only, sir.
Okay.
Yeah.
Then why don't you make it simple, yaar? You know, goods जो बेचता है ओडिशा वाले को तो उसको बिल कर दो goods का, you know, distinct person को, and that Orissa, you know, composite करके पूरा works contract का bill दे देते हैं. What is
so what happens is practically, sir, in all these electric meters, what happens is the electric board first of all goes to the factory and they do an inspection there.
Yeah.
And only after inspection of the meters they allow them to move, and then they give a code, and they want them that code should be mentioned on the invoice when they issue it. Now what happens is when they bring it here and they get the bill from Odisha, they are not sure of that why Odisha is basically billing and whether that code corresponds to the goods which we had identified there. So they don't want that bill should come from Odisha. That's number one, sir. Second is there then in case of a cross charge, wherever there is a valuation issue, that issue crops up that what is going to be the value of that cross charge in that case. So that's why they want to keep it separate, sir.
Okay.
Okay. I will skip this question because it is on a similar sort of question. What is location of supplier and place of supply? One question which I would like to take here, and again, though we have answered this partially, but this one thing which comes from the service tax regime. So in service tax, we had something called Rule 14, which talked about the order of the rule. Wherever you felt like that the service merits classification in one or more rules, then Rule 14 said you will read it reverse. Now let's take an example where somebody is a sourcing agent, where he has to, somebody sitting outside in India, he's procuring a customer who's sitting in India, and his job is basically to take delivery of goods from the supplier sitting outside India, take the delivery of the specification which has been given by the customer in India. He does not have to apply his own discretion. He has to ensure that he identifies a logistic partner and he gives the goods to that logistic partner, and then that logistic partner and pays to that logistic partner for whatever freight amount is there. So he's basically kind of doing an activity of taking delivery of goods, identifying a logistic partner, giving the delivery of goods to the logistic partner, and then logistic partner would then ensure to bring the goods to India. And for this whole everything, he will charge an amount from the customer sitting in India. The question is whether this would fall under 13.8 or 13.3a. Or does it look like that it falls under both 13.8 also or 13.3a also? And now because we do not have provision like Rule 14, which we had in POPS, that is why whatever is beneficial to me, I will take that. If my service, I on the reading of it, I can identify that it may fall under 13.3. And if my place of supply, because of that, basically becomes outside India, though in this case, by 13.3, my place of supply would be partially in India, and hence the transaction would become taxable. So I will say I will go under 13.8, but not under 13.3. Is that kind of a situation possible under GST in absence of Rule 14, which we have, or all the transactions you have to first of all identify that it only falls under one category? As earlier Naresh Bhai said that specific will prevail over general. So I will try and identify what is specific, and I will only fit my service in that particular specific category only. My understanding is that if there is a possibility to argue, and because this is we're not talking about exemption or anything of that sort where I have to read it strictly, but I have to read it in the manner if there is if my service or the place of supply merits classification in two clauses, whatever is beneficial to me, I will try and pick that, and on the basis of it, I will determine what is going to be my place of supply. Any views on this, Abhay Bhai?
See, that proposition would become very subjective, because when you say what is beneficial for you, it is possible that maybe 13.8 could be beneficial. For someone else, it could be something else. So then for the courts to decide ultimately how to read a situation where we have two similar facts and there is a subjective judgment involved as to who gets benefited how, you may not have a uniform law. So what I would propose is this, that why can't we apply Section 8 first and then go to Section 13 of the IGST law? Because when you look at Section 8 of the CGST Act, it says that tax liability on a composite or a mixed supply shall be determined in case of a composite supply by treating it as a principal supply. So in a given situation, if we say that it is the role as an intermediary which is a principal supply, the logistics part is ancillary to that supply, So this supply should be treated as an intermediary service under Section 8A, and therefore straight away go to 13 and go to 8A and say that, look, under 13, it would be the place of supply would be the location of the supplier. So I think that could be one way to resolve this rather than bringing this issue of entire order into picture.
So basically what you're trying to say is that absence of Rule 14 is taken care by the concept of composite supplies and mixed supplies which we have in hand. And then on the basis of it, we'll be able to identify one supplier specifically.
In the given fact situation, there can be a different fact situation where Section 8 may not take care of entirely of such issues. But in a given situation, we have a clear principal supply as an intermediary.
Intermediary supply.
And therefore, here Section 8 can be clearly applied.
Applied here. Okay. We have, okay. We'll go to the last question which we have in hand very quickly, though it's a simpler one. That's why we kept in last. That recently, as we all of us know, that in respect of this export of goods, there has been a rate of tax which the exemption has been withdrawn, and in case if let's say goods are moving from India to outside India through sea. Now, the transportation of goods from India to a place outside India, it is taxable at 5%. In respect of air freight, it is taxable at the rate of 18%. Now, the problem is that we had this proviso to Section 12(8), which was added earlier, and it said that in case supplier and recipient both are in India, the supplier and recipient of service both are in India, but if basically goods are to be taken to a place outside India, then place of supply shall be destination of such goods. The only question which comes up generally in this case is that whether it will deny my ITC specifically in a case where the supplier is in Rajasthan, or let's say supplier is in Maharashtra, the recipient of service, the exporter is also in Maharashtra, but my place of supply becomes is something which becomes outside Maharashtra or outside India rather, and hence it will not be an intrastate supply, it becomes an intrastate supply outside India. Now, because it will be leviable to tax because both the parties are in India, whether I will be entitled to input tax credit or not, specifically with the fact that though this has come only through a change in format of GST R3B, but the kind of intention which comes out is that we have other details in GST R3B, which says ineligible ITC under Section 16(4) and ITC restricted due to POS provisions. Now, this is something which we are reading for the first time. Nowhere in the law you would find that anywhere under Section 16 or under Section 17, it has been mentioned that input tax credit shall be restricted due to place of supply. In fact, when we read definition of IT or ITC also, we do not find any reference of ITC being linked to place of supply provision. Now that we have some sort of an understanding given in the form, whether it will lead to a situation where my input tax credit as an exporter would not be allowed to me because both supplier and recipient are in state of Maharashtra, but place of supply is outside Maharashtra. That is basically the question here. I will just give my view. The only thing is, first, as I said, that there is no provision in the law which specifically debars my input tax credit. Second of all, also people are probably a little worried about because of this advisory which was being issued by GSTIN, that what will come in the situations where what do you have to report where ITC is restricted due to POS provisions. And it said that the state of supplier and the place of supply is same, whereas the recipient is located in another state, then only recipient would not be entitled to the ITC. So only when, let's say, I am in Maharashtra, the place of supply is also Maharashtra, but recipient is not in Maharashtra, it is in another state, then recipient would not be entitled to ITC. Though again, this advisory does not have a legal backing, but it also does not, in its understanding, does not restrict the input tax credit which is available in respect of, which should be available in respect of this freight, which is applicable from 1st of October 2022. So though this creates some sort of a challenge where place of supply goes outside India, but still in that case, input tax credit should not be affected, though still we have this provision given in section table 4D2 of the GST R3B. Any views, Abhay, on this?
No, I completely second your view.
Okay. So with this, we have basically tried to cover all the relevant case studies which we have in hand. only 2 case studies which we have not discussed. The aspects of that we have discussed in other case studies already. So again, I would like to thank CTC for giving me this wonderful opportunity to draft the case study and also to present before all the members, and also to Abhay for mentoring and giving his views and precious time, and also telling us about the different facets on the given set of facts. Thank you to all of you.